Did you know if you turn the microphone on, it actually works? What's going on, you guys? Thanks for letting me know. Appreciate it, Alex. How you doing? Yeah, I was just saying I got my transparency up a little too high on this screen here, but I decided to do a little just chatting screen just to start it out. Yeah, now we're working. Now we're working. Good to see you, Allison. Good to see you, Algo. How you doing? Welcome in. Just getting everything fired up for the day. And we're going to do options. We're going to get into some options action. If you haven't caught an option stream yet, this will be the one that you're going to want to see, because we actually had some solid money that was made in the account. So I'm going to show you guys that. I'm just doing a couple of housekeeping tasks real quick just to finish up and get everything going while other people start joining. But good to see everybody. Last day of the week. Last day of the week. Oops. Whoa, whoa, whoa. Don't need a double. Don't need the double. Okay, cool. All right, let's fire up TikTok and see if I get kicked. Kicked talk. Kicked talk. See if my computer shuts down on me. It says, "Oh, it's too much. It's too much." All right. How's everybody doing? What's been going on? How's everybody's Christmas? If you celebrate it. All right, let's get options fired up here. Yeah. Yeah. Okay, I got that ready. All right, I'll just go back to just chatting for a minute. Nice, good stuff. Anybody get anything that's like, I've been waiting my whole life to get this, and I finally got it? Like a new car or something like that? Okay, where's my... All right. If you guys hear a double voice or something, let me know. I just caught one. Because I'm doing a stream on another platform as well. But if you hear that, let me know. Can't figure out why I'm so transparent. Why am I so transparent? Hubby and I did the weird connected twin thing again. This is getting annoying. Stop doing that. And went to the same shop and bought the same brand stuff. Oh, that's cool. Merry Christmas, Puck. It's good to see you. Welcome in. Welcome in, you guys. Good to see you. Yeah. Yeah, I decided to do something freaking crazy this year for Christmas. I decided to contact a celebrity and have them do a personal message for my wife. And it was epic. There's a service called Cameo that I used, and it was epic. What's going on, Elvis, how you doing, man? Good to see you. Yeah, it was. I was like, this year I'm thinking, what am I going to do? All right, this is getting old. Hang on a sec. Sorry. Let me just... Okay. I gotta close this. It keeps looping back. All right. What's going on, Crazy? Good to see you. What up? What up? What up? Happy Valentine's Day to you, my friend. It is good to see you. Hope you found the love of your life today. Oh, that's funny. Okay, just trying to figure out, just letting a couple more people roll in before we get started. If that's all right, you guys. If you guys don't mind. We're going to get started. We're going to go straight into options, and we're going to show how Tesla helped us crush it this week. Tesla crusher. I'm at Grand Central Station. Yeah, I'm actually at the New York Stock Exchange. You see that? Let's see. Yeah, you see it says NYSE right there. Yeah. And then there's dollars flying everywhere and coins. You know. Leave it to AI, where I'm like, hey AI, could you please create a background for me where I'm at the New York Stock Exchange. And it creates this with all these dollars everywhere. I'm like, come on, man. So I'm like, that's not that bad. Maybe I'll use it. If I was like not so ghosty right now, maybe it would actually look better. I'm trying to figure out how to make myself less ghosty. That's getting worse. And I disappeared. Why am I so ghosty? I can't figure it out. I can't figure out anything. All right. Yeah, it's funny. Lamau. What up? Okay, all right. Let's jump in. It's been about 7 minutes. Let's jump into the options in the trades. Okay. Let me run a quick poll. Because I need a little bit of information from y'all's. Basically, do you want a full breakdown? Or do you want me to kind of assume you know some stuff? So I'm just gonna... Hey, what's going on, Algo? Good to see you. Okay. Basically, if you don't mind, just answer this poll real quick. And that'll help me understand like how much to dump into this session. Nobody knows nothing. What's up, Snip? Good to see you. Snip. Did you guys watch my Christmas videos? Oh, I put out 3 videos yesterday, and all 3 of them they took me several hours to cut down. So we did a live stream on Christmas Eve, and I was like, oh, this is like 2.5 hours worth of content. I've basically taken as much of the good stuff as I can and made it into 3 total minutes. What's going on, Juan? Good to see you. Hope your Christmas was good, my friend. I appreciate it, Allison. I had to sift through so much content, and I was like, oh, this is going to take me forever to make like the best 3 1-minute shorts that I could. And my favorite's the second one because it's so ridiculous. What's going on, Tim? Good to see you. Merry Christmas, my friend. Merry Christmas. We're just hanging out in this little New York Stock Exchange lobby until we start the options. We're gonna start the options here very, 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 very shortly. Just got a poll real quick, for anybody just to kind of give them more of a breakdown in options, or just jump right into the profits. I don't mind repeating the information. I wish I didn't look like a ghost. I don't mind repeating the information because it allows you guys to just soak it in more. Even if you know it, it's a good refresher. Okay, for the most part, we got yeses on the full breakdown. 9 votes. Okay, we'll go with that. All right, cool. Sounds good. That's good for me. Okay, stock options. You guys are ready. Let's get into this again. Yeah. You might have to look at me as a ghost for a while while I kind of go through some of this stuff. Okay, cool. That's all right. We'll make it work. I'm going to figure out the ghost thing later because I just finally figured out the chat box. It took me forever. Yes, it will be recorded. Yep. And I have 2 more that are recorded that are basically, this is going to be a refresher from those. I'm basically going to go over pretty much the same information. So if you missed missed these ones, sorry, if you missed this one, you want to go check out those, you can. I've got a lot of information in there. Okay, cool. Hopefully I don't bore you guys to death, but we'll get into it a little bit here on what's going on with the options. Okay. All right, to start out, options are basically, in the stock market, you have what's called calls and puts. And basically what you can do with your options is, let's say you wanted to buy contracts. I'm gonna do something real quick. If the music gets a little too loud, let me know. I'm normally monitoring the music, but it's really distracting and I need to focus. So I'm gonna take it out. But if the music gets too loud, just let me know. All right, now I can actually think. Okay. Oh, it's so much better. My brain just freed up like 200 bits of information. Okay, so basically you have contracts, and what contracts in the market are, we call them cash secured, we call them puts and calls, okay? You know what I'm going to do? I'm going to give you guys a visual. Instead of just me talking, let me give you a visual so you can actually, it'll connect a little bit better. Give me 1 sec here. Let me pull it up. Let me get it ready. Please, if you don't mind too, stay active in the chat if you guys have questions. That'll really help me. That'll really help me be able to iron out any confusion. It'll allow me to answer questions, and if you're stuck on something or you're not quite fully grasping something, which is gonna happen because options are confusing, then it'll allow me to answer that for you. So yeah, stay active in the chat if you guys don't mind. All right.
Imagine being able to build an app with your name on it. just by thinking about it.
And this here,
Base 44,
I am...
a complete...
What I'm going to show you... maybe? Sorry, I'm just trying to bring up the correct... Where is it? Here it is. The screen share that I'm going to show you comes from Alex Pandrea. He has a great YouTube channel about options, so I definitely recommend checking his stuff out. Let me bring that up right now. Not that. Okay. All right, cool. Copy on the no stupid question. No, you can't. Stupid questions are good. There's no stupid questions. Trust me, this is a complicated concept, so you're fine. Don't feel like there's don't feel like there's a question that can't or doesn't belong in the question queue. I don't know what I'm trying to say. You guys know what I'm trying to say. All right, so you have what are in the blah, blah. In the stock market, you can buy options or you can sell options, and to simply put, an option is just a contract against shares. All right, it gives you leverage of 100 shares. You don't buy 100 shares or sell 100 shares. You buy a contract or you sell a contract that controls 100 shares. Okay, so the buy and sell side of stocks or stock options is different. Your goal here, what we're doing is you want to use those contracts to leverage the shares and then make money off of that. It's not as simple as just buying 100 shares, waiting for it to go up $5 per share, and then selling it. Eventually you'll get to that, but for the most part, you're just basically starting out as, I'm going to make money by leveraging shares. You control 100 shares in the market, but you don't necessarily plan to own the shares. However, you can, or you need to be willing to own the shares. And we'll get into that, what that means. So if you look on screen here, we have calls and puts. These are, let's see if I can bring up a mouse. Can you see my mouse? Yes, okay, good. All right. So look at them, this grid here, look at them as opposites. This is opposite, and this is opposite. Like this. Look at it. Get used to seeing this like cross. Like this. This one and this one. This one and that one. Okay? We're going to not focus on buying, right? We're not buying we're not buying contracts, okay? Contracts, if you buy options contracts, you're sitting down at the table, right? You're rolling the dice. Your chances of losing are high. Right, you don't want to do that. And I'm only going to teach selling options. There are guys out there that teach buying options, but it's similar to futures. You guys kind of already understand it, but it's a lot more risky because you have what's called the Greeks, and the Greeks are factors of the options contract that affect it in other ways, and there's 5 Greeks. Now I won't get into all 5, but basically it's different. Than what I want you to know is that buying options is very risky because the Greeks manipulate what happens to those options. But as a seller, we use the Greeks in our favor. As a seller, we are the house, right? We're the house. We set the table. We lay the cards out. We lay the dice out. We want the guy who walks in the front door to sit down at our table and put down his hard-earned rent money, right? We don't want that. You know what I mean? You know what I mean? That's the idea. So we're going to focus on selling. So looking at selling calls and selling puts, we're always going to start with selling puts. And the reason why is because you start with cash. Think of it like this. If you walk into a store, and most stores don't do this, but if you walk into a store and you see, and you want to buy something, right? You're going to bring cash in, okay? Or if you go like, let's not do a store because that's a bad example. A market, like a farmer's market or something, right? You walk in there, in one hand you have a bag of cash, and in the other hand you have a bag of whatever produce you have. If you produce corn or if you produce potatoes or whatever. And you're going to trade one of them, right? You have one or the other, or you have both. If you want to sell a put, you need to start with a bag of cash. If you want to sell a call, you need to start with a bag of potatoes or a bag of corn. You're basically going to say, here's my big bag of cash, and I'm going to use this as collateral. Or, here's my big bag of potatoes, and I'm going to use this as collateral. One or the other. I hope that makes sense. So we're going to focus on selling cash-secured puts. That's the first one we're going to focus on. Big bag of cash. Cash-secured puts. Selling cash-secured puts. So what does that mean? If you eliminate the left side here where it says buy, and I'm going to move it so you don't need it. We're just focusing on the sell. Selling puts. Well, I'll leave it up. Just ignore where it says buy. All right? Ignore this. You don't need these. I want you to focus on sell, calls, and puts. Sell, calls, and puts. Ignore this side. So if we focus on selling cash secured puts, that gives the seller the obligation to buy shares at a given strike price on or before the expiration date. When you sell a put, you're selecting an expiration date. 30 days, 45 days, whatever. That's how long this contract's going to go before it expires. And what you're doing is you're saying, I would like to sell this contract, and I'm going to put my big bag of cash up as collateral, which means that if this little bet that we take called selling an option, called a contract, goes in your favor, Mr. Buyer, then I am obligated to purchase 100 shares at the price that we agreed before it expires. And the way that usually looks is I'll put up $10,000 on a ticker like, I don't know, United Airlines, and I'll say that this contract is not going to, or the stock price is not going to go above $100. One sec. Okay, so that says to the buyer, all right, I'll take that bet, right? I think that the stock's actually going to go down. I don't think it's going to go up. I think it's going to go down. And if it does go down, then one thing happens. And if it does go up, then another thing happens. And that's called a strike price. A strike price is where we agree to place our bet, I guess you could say, right? The strike price is like $100. And that, when you open that contract, that contract has 30 to 45 days, whatever you decide. You're the seller, you decide 30 to 45 days to, it has 30 to 45 days to hopefully stay above that price. And if it stays above that price, you win. If it goes below that price, you don't lose. And if that doesn't make sense, it's okay, because it's meant to not make sense just yet. All right, so we're selling our cash secured put, right? We say within 30 days, I'm betting that this stock will not drop below $100. 30, 45 days goes on. It closes at $110. Yay! What happens? This contract expires worthless. That means that this contract is garbage. Garbage to the buyer. For me as the seller, I'm in the money. I'm in the money. Yeah, you don't own the... Yeah, exactly. You don't lose because you don't own the contract. Exactly, Tim. You can sell again later. Exactly. When somebody buys the contract, what typically happens, they don't sit on it for 30 days. And the reason why is because we have the Greeks. The Greeks are constantly changing and deteriorating this contract. They're working against this contract. The ones that we care about are theta and delta. I'll get into those later. But just think, time, because we have an expiration, right? 30 to 45 days. Time is slowly eroding at this contract. So we have 30 to 45 days. So it ends at $110. I sold this contract for, let's say, we'll say I sold it for $50. I'm just using small numbers. The second I sold this contract, I get the $50. It goes straight into my account. When this contract expires, I keep the $50. And I keep my big bag of cash, my cash secured puts. Does that make sense? Okay. Now, let's say it expires not in our favor. Let's say that stock price, we agreed at 100, and guess what happened? 30 days goes by, and the stock dropped down to $90. So technically, we lost this bet, right? What the buyer has already done is already taken this contract and flipped it like 100 times. You don't really need to know too much about what they're doing with it. Once you sell it and you create it and you put it in the market, like, let's see, who said it? Tim said they're buying it, selling it, buying it, selling it. They're scalping it until it dies, basically. And it's like, all right, whatever, right? As the seller, we have the option to go back in and buy our contract back, which is an advanced concept we're going to get into later. That's how you make your real money. But we'll get into that later. Trying to keep it simple. Okay? By the way, just as a shout out, Pandrea Finance, this is where this information is coming from that you see on screen. This is his slide, his screen. So I give him full credit for this screen. He's an awesome dude. You should check him out. Okay. So now the stock, it expires at $90. So now this kicks in. The seller's obligated to buy 100 shares given at the strike price, and it expired. So now this big bag of collateral, this big bag of cash that I brought in gets used. I didn't lose. Remember, when I sold this contract, this is the sweet spot. This is the meat and potatoes. When I sell this contract, I keep the premium. The premium comes directly into my account, and it stays there every single time, no matter what. No matter what. Doesn't matter. Before, so it says here, gives the seller the obligation. Before this sentence even starts, I make money. Instantly. I make $50 or $100 or whatever it is instantly. That money goes directly in my account and it stays there until I choose to do something with it. It is like basically free money. I know that sounds bad. It's free money, but it's got some strings attached. but that doesn't mean you're going to lose that money, right? So always keep in mind that we collected a premium. Whenever we click the sell button, we collect a premium. When we sell a call, we collect a premium. When we sell a put, we collect a premium. Think of it like almost like a finder's fee, right? Think of it like you walked into the front of the building and they automatically collect a fee from you before you even get to look at the menu. Before you even sit down to the menu, you already spent money as the buyer. That sucks. I don't want to do that. I want to be the one that's collecting the money. All right? We're the restaurant here. We're the building. We're the business owner, whatever it is. All right. So if you keep that in mind, then what you want to look at next is what's going to happen next. Okay, I bought the 100 shares. Now, my asset has changed. If we go back to the market, like you walking around in the market, you walked up to a table, you made a little exchange with somebody, you gave them your big bag of cash, and in return they give you 100 shares, which in this case could be a big bag of, I don't know, tamales or something. Right? You got these hot tamales. Now, it's time to make some more money. This is a good thing. This is a good thing. You get assigned 100 shares. It's a good thing. But when you do this, you need to make sure that this is a stock that you're willing to own. If you're not willing to own 100 shares of, I don't know, Starbucks or something, then don't sell a contract against Starbucks, because you're probably at some point going to get assigned. And in this case, you want to be picking the best companies out there, the ones that have been around for 1,000 years, the ones that are in the news all the time, the ones that have, high volatility, the ones that have, good, healthy companies that if you ended up getting 100 stocks of this company, it's like, great, they're growing anyways, so it's fine. All right, now we got 100 shares. Now we walk over to the next table and we say to somebody, hey, I see that big bag of cash that you got sitting there. I've got 100 tamales. Want to place a bet? Want to have some fun? Same concept. We're going to do it again, but now we're going to do it on the call side. We're going to sell a covered call. What is a covered call? A covered call is, I have this big bag of tamales. I have these 100 shares. If we take this bet, I've got it covered. I don't have the cash. I already paid for the big bag of thing, the 100 shares or whatever, with this big bag of cash, but I've got you covered. And so what is a covered call? It gives the seller the obligation to sell shares at a given stock price on or before their expiration date. It's the same thing again. Now, to take that original, deal, guess what? Mr. Buyer pays me a premium every time. Without question. Every time. I'm selling a call. I've got my 100 shares. You're going to pay me first. That's how the premium works. Every time. So now we collect another premium. Now it's like, okay, I made another $50. I sold a call. I put another contract out into the market. This time, though, I've got my big bag of tamales as collateral. That's why I said you walk into the market with a big bag of cash or a big bag of whatever, some product, which in this case is 100 shares. All right, so now what's going to happen? Now, what we want hang on one sec. Just looking at something real quick. Okay. Now what we want is we're going to agree on a strike price again. So we'll just say I got assigned, which basically means I exchanged my big bag of cash for 100 shares. I got assigned at $100. If if you wanted to, you could just sit and wait before you sell another contract, right? You bought 100 shares at $100. It's currently at $90. You could wait until the stock goes back up to $100, and you could sell them all off and be done with those shares and get all your cash back and start over again. However, remember, we collected a premium at the beginning, so we're at a better place than we were before. But we want to make more money on this, especially if those shares stay below that price for a while, okay? Let's say they do. We've got 100 shares at $100. That's 10 grand. All right. And we put out another contract. Now we're selling a covered call. That covered call says I am obligated to sell my big bag of shares at a given strike price, right? Which would be, I'm going to choose $100. And the reason why I'm going to choose $100 is because if I lose this bet, I'm not going to lose any money, then my shares are going to get bought at $100 and called away. This is why they call it a covered call. They're going to get called away at $100. But I still collected a premium when I sold the put, and I still collected premium when I sold the call, so I still made money. However, if we select a higher price, is what I usually do. I select just a higher price. Instead of $100, let's do $105. Let's add an extra $5 per share. That means that when these shares finally get called away, they will sell for $105 per share, and I bought them for $100 per share, and in the meantime, I've been collecting premium along the way. It's a freaking cash cow. This is a cash cow. This is a money-making machine. I don't know how else to put it. It really is, because you're collecting premium for every action that you do. You're collecting premium every time you sell a contract. You got assigned shares, no big deal. I made money before I even clicked the button, basically. And you just continue to do this over and over and over again. All right, so what are we looking for when it comes to a covered call? We choose a strike price of $105. If the stock stays below that price, then that contract is going to expire worthless in our favor every single time. That means we will collect a premium, we'll keep our shares, then the price of the stock in 30 days or less, I like to do 2 weeks to 30 days on covered calls, it stays at like 95. Okay, cool. It expires, the contract goes to zero, we keep the money from our premium, and we keep our shares every single time. And then guess what? We turn around and do it again. All right, so that's the best case scenario. In this situation, though, you cannot lose, and here's why. That's best case scenario if you want to keep your shares. Best case scenario to get your money back is what would happen on the opposite side. All right, so we chose $105. Let's say we won the first one, right? We kept the $50 premium or whatever. Now we're going to do it again. We're going to make money again. We're going to click the button again. We sell another call, another covered call, and this time let's say we choose $105 again. Let's say the current price of the stock is at $95. Well, we'll sell another call. Cool. Within a week, the price of the stock shoots up to $115 and stays there. Let's say it stays there for the rest of the contract. Now it's at $115. We said $105 we'd be willing to sell our shares at $105. So then the contract finally hits expiration, which is 2 weeks to 30 days. What happens? We sold a covered call. It gives the seller the obligation to sell shares at a given, this should say strike price, on or before the expiration date. which means we agreed to $105. The stock is currently at $115. So what's going to happen? We are going to have to sell our shares at $105. Somebody's getting a good deal. Somebody's going to be buying our shares for $105 when it's currently trending at $115. That's fine. I'm okay with that. That's not a loss to me. That's not a loss. Here's why it's not a loss. I'm selling my shares for $105. I bought them for $100. I'm making money. I just made $500 extra dollars. And I collected a premium every single time. I collected a premium, and in this case, that I've actually collected 2 premiums. Oh, I also sold the put to start this whole thing. I collected 3 premiums. So now I'm up $150 on my premiums. I also sold the shares for higher than I bought them at and made an extra $500. I'm up $750 within like a month. Whereas the other person who just buys and sells shares and sits on them for a month hasn't made any money at all. And that's the magic. So what happens, right? My shares get called away. Somebody buys them, and now a big bag of cash comes back into my account, and here we go again. Let's make some more money. Starting all over. Time to sell another cash secured put. That's called the wheel strategy. That's the wheel strategy. You sell a cash secured put, you collect a premium. You get, let's say you get assigned 100 shares. Then you sell a covered call and you collect a premium. And let's say those shares get called away at a higher price. Then you get a big bag of cash again and you start this wheel strategy all over again. Rinse and repeat, back and forth, back and forth. Collecting money for every single action that you do. Okay. That is like the most meat and potatoes I can give you in this regard. We can get into like delta and theta and get into like the nitty gritties, or I can jump straight into the market and show you how we're doing this. I can show you the money that's been made. What would you guys like to see next? 19,000 likes on the TikTok. Sick. It must be you, Alex. You rock, dude. I appreciate it. Show me the money. Show me the money. Yeah. 19,000 likes on TikTok. On just this stream. I appreciate it. Whoever's clicking that button. Thank you so much. Yeah. Yeah, we'll get into an example. Last week we sold a ton of cash secured puts. So I want to see how it looks this week. Where are we at? So that's what we're going to look at. Okay, what we'll do is we'll jump into that, and then we can always come back, or we can get into like more nitty gritty. But I'm giving you kind of the 10,000 foot view of this whole concept. And I recommend using this with a personal account. I promise you this, you will never lose money. This is 100% strategy. It's not even a strategy. It's a proven method. Warren Buffett does this stuff. People who are making money in the stock market aren't just sitting there on their stocks. They are constantly rotating. They're rotating their cash. They're rotating their collateral. They're rotating their stocks constantly. This is how they're doing it. They're not just sitting there waiting for a miracle. So we're going to do it too. My throat sucks. Okay, let's get into it. Let's get into the goodies. You have your crowd ready? Excellent. Sounds good. Sounds good. What's going on, Shib Dog? Good to see you, my friend. Salam alaikum. Is that correct? Maybe that's the wrong language. I think it is. What's going on, my friend? Salam. Yep. Maybe an example with SMCI, probably what the most of us will start with. Yeah, sounds good. Sounds good. We will. We'll look at SMCI. We'll look at UAL. We'll look at Tesla. Tesla's a good one. Yeah. SMCI is a little bit in the it's kind of on pause at the moment, but I think it's going to pick up. It's going to be picking up in January. It always does. Good to see you. Good to see you. Okay, cool. Let's jump into it. Let me get this off screen here. If you really want more, you guys have some extra time, check out Pandrea Finance. This guy, he's a little corny. His jokes are really not really that funny, but it's okay. Just you can get past that. He's really smart. This dude turned $16,000 into $1 million through the COVID era, through 2020. And he did this. This is how he did it. You think, yeah, that's okay, Shibby. I've got it recorded, so you'll be able to watch it again. And I'm going to this time I'm going to put some shorts out, too. Put some shorts out. Shorts are tough because this concept is so big, right? To get little bite sizes, you're just not going to get enough information. So I got to decide how I'm going to do that. If you're like me, when I used to do is to watch Daniel's streams, when I missed them, I'd put them on 2x, and then I'd listen to the stream. And it would just be like, what's going on, guys? Good to see you today. We're going to start in gold. We're going to go over here and we're going to, oh, look at the gold market's gone like this. And so I'm like sitting there and listening to it. And I'm like, I'm able to absorb all that at like 2x speed. Might not work for options, though. We'll see. We'll see. All right, let's bring up the options. I might hide the chat box here. Right now it's over the calculator. I might hide the chat box. We'll see. Look at all that green. Look at all that green. I'm in the money. Okay. All right. So what did we do last week? This right here is Think or Swim. This is a paper trading account. I actually have a real account that I do this in, but for demonstration purposes, I'm using this. I'm pretty sure you can get a free paper trading account if you want to practice before you start doing real money. Just like with, when we're doing futures, right? But I promise you will not lose money in this market, in this strategy. The only way, there's only one exception to that rule. And that is the company crashes. The stock goes to zero. If the stock goes to zero, everybody loses. The guy who's hedging funds, the guy who's just buying and selling stocks, the company, the employees, like literally everybody loses. So that's your worst case scenario, is that everybody loses. Or the stock market crashes, but then everything else is going to crash, right? So it's like, all right, I'm gambling on the sun to not, crash into the earth and throw the moon at me as a consolation prize. Right, I'm gambling on that not happening. I mean, I shouldn't have said the G word. We're not doing that. We're not doing that. Okay, TikTok? We're not doing that. It's an expression. Don't ban me. It's an expression. TikTok has a way. 22,000 likes. Man, I appreciate it. Alex, I think you're sitting there like just smashing that like button. You're the best, dude. I think that's what's going on. Appreciate you, man. Appreciate you. Sick. Yeah. It'll get it out there. That's awesome, man. Appreciate it. Thanks, Alex. Appreciate it, man. Appreciate it. You're the best, dude. I need it muted over here, but whatever. All right, let's continue. Okay, so what did we do last week? Last week we sold a bunch of cash secured puts. How much cash? Well, this account gives you $125,000 to start with, as you can see right here. Right here. We started at 125 last week. We're already at 126.8. Not too shabby. It's actually more than that, but we'll get into that. 200K, sweet, excellent. Okay, so before I get into what we've done here, there's some things you need to know in regards to the money, right? It's simple math. Everything is multiplied by 100. If you select something that says 1.5, multiply it by 100. if you select something that says 3, multiply it by 100. Okay, if you can remember that, then you can remember, oh, I'm actually going to make $1,000, not $100. So what we did is we, last week, had 125K, and I went through and picked some of the best companies that I could find, but then I also selected the best premiums that I could find. Because you'll have some certain companies like Coca-Cola, great company, been around for ages. Very, very stable stock. Terrible premiums. Why? Because it's so safe. There's a little bit of risk here. A company like Tesla, everybody knows Tesla is volatile, but their premiums are juicy. Very juicy. In fact, you can see of the list up there, Tesla's not up there. We sold contracts in Tesla last week. It's not up there because it closed out in our favor. I got a notification on Wednesday during our stream. It said sold or bought back contracts, and I was like, oh man, Tesla, sick. And what I should have done in the normal market, but because this is for demonstration, in the normal market, what I would have done is immediately gone in there and sold another contract. But I didn't do that because I wanted you guys to see that process right here. Gonna head out. Sounds good, Tim? Yeah, sounds good, my friend. Good to see you. Appreciate you. Yeah, we'll. I'll definitely cover SMCI so you can come back and watch on the replay, so you'll see it. But yeah, good to see you, man. Tim, you guys, real quick. Tim has already started this process and has already made money. He's already done it. He was talking about it in the Discord, which I have a Discord here. If you guys want it, I'll post it here. I'll pin it. If you're not in the Discord, he already started making money doing this. I was a little blown away by how quickly he got it going. He got it going quick, and he already started making money. And Tim, I gotta say, you're on it, man. You picked the correct stuff. You were like, hey, can you double check this? And I was like, yeah, you got it. That's good. That looks good. Yep, just remember this. Yep, you're good. So he was able to do that. So, and I'll provide that for you. If you guys are like, hey, I'm thinking about selling this contract, what do you think? You guys can post that in the Discord, and I'll show you. I'll show you that I'll help you out, basically. But anyways, good on you, Tim. Awesome. Okay, cool. So let me just do this real quick. For anybody who wants the Discord, I'm going to throw it in TikTok as well. Let me just do that real fast. I need a moderator. I guess I'm using Stream Elements. Need somebody to do this for me so I can keep streaming. Or I need an admin or something. At some point, I'm going to be like, I'm going to need one. I'm really going to need one. TikTok, I just pinned the Discord. YouTube, I just pinned the Discord. And let me just, I'm also streaming on Kick now. So let me just do that real quick. Real quick. I just want anybody who's watching the stream over there to potentially have the ability to join that. One sec. All right. There's no audio loop, is there? Okay, good. I wanted to make sure. All right, let's continue. All right, so we picked good premiums, we picked good companies, and we picked good expiration dates. The expiration dates you're looking for when we're starting with cash, right? Most of the time, 9 times out of 10, you're going to start with cash. You're going to start with a cash secured put, right? Your big bag of cash. Most of the time, you're not going to just walk into the market with a big bag of potatoes. But if you do, you can start there. Yeah, you definitely can. You can say, you know what, I want the 100 shares first, and then I'll start the contracts. You can do that too. But for this demonstration purposes, we'll start with cash because most people are going to start with a big bag cash, right? So how much cash do you need? In the Discord, let me actually bring it up so I can show you, because that's important. Let me just bring that up real quick, so you guys can see the notes that I have in there. Why is that working? Okay. On screen, I'm going to cover myself up for a second. All right. I've got these. If anybody wants this, where it says options basic training right here in the Discord, options basic training. I've got all this information in there. You can start from 3 to 5,000, and you're going to start with these basic, I would say something in here is what you're going to need. Intel, SMCI. They offer affordable strikes, liquidity, and some premium relative account size. Now, I know the liquidity is a trigger word for us, right? But liquidity in this means something different. What it means is that they're constantly bought and sold. Like it's a liquid stock. It's moved all the time. It's not something that just sits there. It actually is very desirable, is what that means. You can liquefy your stocks pretty quickly. All right, now if you're starting with $5,000 to $7,000, picking some steadier companies: Delta, PayPal, and Coca-Cola. PayPal's a little tricky. PayPal tends to sit at one price for a long time, so I would say be cautious with PayPal. And Coca-Cola is super stable. You're not going to make a ton on PayPal and Coca-Cola, but you will do good on Delta. You could do good on Delta. If you're starting with like 7,000 to 12,000, I would recommend GM is another safe one, right? The premiums aren't great, and same with Walmart. But United Airlines, the premiums are really good, and I've made most of my money off of United Airlines. And then 12,000 plus, NVIDIA and AMD. AMD is really good. It's very liquid. It moves a lot. Same with NVIDIA, but NVIDIA can be a little bit more stable. And then if you are in the big boy league, 50,000, now you're looking at the top 5 to 10 companies in the world. Tesla, Microsoft, Apple, Meta, Google. They're extremely liquid. They're institutional favorites, and they're ideal for long-term income strategy. Once you get into this range, into the 50,000 range, you can start making a monthly wage. You can sell enough contracts here to make a monthly wage, which is what I am trying to get to as fast as possible. All right, choose your tickers. Don't choose your tickers based on hype. Choose them based on, hang on a sec. TikTok wants to make sure I'm still a human. All right. Okay, TikTok's happy. Okay. You need to be willing to own the share. And you're going to be making good money on these bigger contracts. All right, where's the sweet spot, right? The sweet spot here is now we have to talk about Delta. Delta is basically how much will this contract deteriorate over time, right? How much will it deteriorate? In some cases, it deteriorates 3 cents per day. In some cases, it deteriorates $3 per day. And then the theta is how much time. Time just slowly erodes. Sorry, let me start over. That's theta. What I just explained to you is theta. How much does it decay every single day? It decays by 30 cents every day. It decays by like $3 per day. Sounds good, Algo. So that's theta. Delta is basically what percentage are you... It gives a decimal, which you can convert into a percentage. What are the chances you're going to win this bet, basically, or lose this bet? That's basically the best way to kind of explain it. And in this case, as you can see, on cash secured puts, the sweet spot is 25 to 30 delta. That is a number you have to remember. 25 to 30 delta. Same with your expiration here, 30 to 45 days expiration. On covered calls, the same thing, but we're looking at more of a 14 to 30 day expiration. And just a friendly reminder, we're not buying options, we're selling options. So anyways, there's more in here. You guys can check that out. Okay. So let's get into the examples. All right. Everything you see on screen here that's green are contracts that are live. They are in working status, as you can see in the corner. Working status. And that means that I have put these contracts into the market, and then we'll come back to this green, which is basically before they expire, I want to buy them back. Because it shortens the amount of time that I can make money. I can make money quicker by doing this. This is more advanced, right? So we'll come back to that. We'll come back to that. The only time, and I mean this, the only time you're buying contracts is when you're buying back your own contracts. You never buy other contracts. You buy back your own contracts, which is a buy to close order. You sold a contract, you put it in the market, and you wait about 3/4 of the time for it to expire, and then you buy back your own contract, you close it, and then you start over. Okay? That's a little bit more advanced, a little more complicated, but you can do it two ways. You can just let them expire every single time. You can let them go 30 to 45 days. That's fine. And that's the idea. That's what we taught. That's what I taught you earlier. But if you want to make that process a little quicker, buy them back before they expire. You're going to give that contract about 75%. Remember when I said that the theta is constantly deteriorating it? You want that contract to deteriorate about 75%, and then you buy it back. The money that you're using to buy it back, you've already collected as a premium. So it doesn't come out of your kids', cereal fund, right? It comes out of money that the market already paid you. Already paid you. Okay, cool. So let's look at selling. How do I do this? This is the order I want to do this in. Let me think for a second here. Okay, this is what we'll do. Let's look at what happened last week in Tesla. All right, and then we'll open another Tesla and we'll go through that process. That way you can see you'll see, I wanted to think like before and after. You're going to see the after and before. And the reason why is because we did it last week. It closed. Now we're going to do it again. So anybody who was in the stream last week, you'll see the kind of the full process. If this is your first time seeing this process, you'll still get to see how it's done. But I'm going to do that as part 2-ish. I know that's confusing, but it's okay. All right. Let's go into where is Why is the order not there? One sec. That's strange. It's not showing me Tesla under filled orders. I should be able to look at Tesla. All right, well, I'm going to have to do it like this. Shucks. Okay, well, the best I can do for whatever reason is not let me see the full order. But what I can show you is I made $1,400 in Tesla in like 3 days. In like 3 days. I think I actually made more. Three days. Because what we did here is we sold a contract. The stock market moved, the price moved up. Our contract expired in like 3 days. It was a 30-day contract. I'm going to have to dive in here and see why. Like, I'm going to actually try and find like the filled completed orders. On paper trading, for whatever reason, I can't see that. But on my normal account where it says filled orders or trade history, it's there. So I don't know. I got to figure something out there. But anyways, that kind of gives you an idea of Tesla. And we're going to do another one. We're going to do another one. Okay. So as you can see, where account here is where is it? I'm gonna have to move myself real quick. Net liquidity value right here. See where it says 128,000 or 126,000? That's, we turned 125,000 into 126,800, almost $2,000. Made almost $2,000 in 1 week on this strategy using selling Tesla. And if you look below, it says 118,000. That's our collateral. 118,000 is our collateral, which is all this stuff you see up here. Okay, so that means, why is this double posting? All right. So let's look at Tesla again. So now we can sell another Tesla. So let's look at Tesla. Okay. So first thing I do, if you're following along on your paper account, this is what you're gonna want to do. You're probably gonna want to start on like an SMCI or whatever, but I want to get another Tesla order in, so we're gonna show you that. Tesla, you're gonna need a lot of money up front because the stock is so high. All right, so what are these boxes that we're looking at right here? Puts on this side and calls on this side. See how it says calls, puts? Remember how I said this, and like this? You're doing the same thing here. In this platform, Think or Swim, we want to trade the black, not the blue. The blue is buying. The black is selling. Like this. This is what we're trading. If we're selling a call, if we're selling a put, we're in the black side on here. If we're selling a call, we're in the black side here. We cannot sell a call without 100 shares. If you sell a call right now without 100 shares, hopefully the platform blocks you. If you sell a call, you can get in trouble. So don't sell a call if you don't have shares to put up as collateral. Don't sell a put if you don't have the cash up as collateral, right? If you have 100 shares and you sell a put, that's a big no-no. Not good. You have to have the correct collateral. Puts, cash, calls, shares. Cash secured puts, covered calls, covered with shares. That's the way you do it. All right. So the current stock price for Tesla right now is at 400. Let me change this overlay border. It is currently at $474 times 100. Everything's times 100, right? That means in order to buy 100 shares of Tesla, we need $47,000. Now, most people are not going to be doing this, right? We're not going to just, oh, we got a cool 50 grand sitting around, so we're just going to do that. But in this account, for demonstration purposes, we can do that. So we need $475 times 100. We need $47,000 as collateral in order to sell a contract on Tesla. We'll need a little bit less, but here's basically the way it is. All right. Okay. So which contract should we pick? Here's the process. If you're following along, here's the process. First thing you want to do is you want to go to the charts, just like in futures. What are we looking for? We're looking for a good, solid support level. A level that the stock will stay above. That's what we're looking for when we're selling a cash secured put. So I like to do as far out as possible just to get a kind of a pulse on the market. Looks like in July, Tesla slowly crawled up from April. Then it kind of stabilized in September. Hit a big high here. That is not Tesla. Make sure you've got the correct ticker. Start that over. Tesla, did you see how AMD kind of does this, right? And Tesla's like boom, 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 like a heartbeat. It's because it's more volatile. So Tesla's up and down, 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 right? And right now it's at a high, or it just hit a high of 498. Okay, so let's get in there and see what's a safe. We're looking for a safe support level. Come on, work with me here. Oh my goodness. I really hate this. Why do I have to go through this? Where is it at? Where's the candles at? Somebody help me. Where'd they go? There they are. Oh my God. Ah! All right. Trying to find a support level. Okay, good. All right. So now you kind of need to use your trader brain to figure this out. Right away, it looks like to me Tesla jumped up here. 466 created a level. And then now it's kind of dancing around again. These are the 1 hour candles on the 180 day. So 465 might be good. We want it to stay above 465. Or if you want to really be safe, maybe like 445. 445, 435. So let's look between 435 and 465. We'll look for a support level. We want to create a strike price. This is the price that we're cutting this deal at. All right, 465, 445, 435, somewhere around there. Going back to the charts. Oh, look. 467, 465. You guys see that? You see the correlation here? 460, 470. We wanted to stay below like 465. Maybe closer to 460. You can change the strikes here to be more. I just have 14. But if you do, you get literally everything, which is kind of overwhelming. Right? So I'm actually going to go back to 14. All right. So next thing, what's our delta? We wanted between 0.25 and 0.30. And what that means is 25% chance to 30% chance the buyer wins. 25% chance to 30% chance that the buyer wins. Flip side, 75% chance we win. We want the 75% chance. 70 to 75% chance that we win. That's what we want to select. The lower the delta, the more it is in your favor. And what do I mean by win? That the contract expires worthless. You keep your cash secure, your collateral. You still keep the premium. That's out here. The buyer will never be able to take back the premium. You're always going to keep the premium, no matter what. I'll say that another 1,000 times before I turn 39. Forever. You keep your premium. What we're betting on here is if my collateral, my cash collateral gets called away or gets used to buy shares. So look, here's our delta. 30, what I say, 25 to 30%, around 465 or less. There's your confirmation that you picked a good level, right? I actually would like to go a little lower, and I might. So 33 means the opposite is that is 66. So 66% chance that we win this. I want a higher percentage. I want like 70 to 75. So I'm actually going to open up more strikes here. I know it's overwhelming. There's a lot to look at, but we really want to select the best case scenario for ourselves here. So our delta 33, here's the one from before, to 30 to 29. Kind of want to be in this range. If you go over to theta, this is how much it deteriorates per day. Remember, this is times 100. Yeah, that's $30 to $40 per day that this contract is deteriorating. That's insane. It's either 30 to 40 or it's 3 to 4. I don't know. My brain's cooked right now. So, but that's how much it's deteriorating per day. That's fast. I think it's 30 to 40. It's times 100. That means every day that this contract is open, it loses $40 worth of value. That's good for you as the seller. You want that. It's bad for you as the buyer. All right. So remember, everything's times 100. You see these numbers? This is the bid and the ask. This is the premium right here. What you're seeing right here. This is a premium that we're going to collect to open this contract. Do the math. Do any of those numbers right there times 100. That means if I click this button right here, right now, I'm going to make $1,000 like that. 100%. Go straight into my account. I make $1,000. Done. This is why Tesla's so good. Any questions there? So we're going to select, we'll try and let's select something a little bit more safe. We want a delta closer to 30. I wanted to stay below 465, closer to like 445. But as you can see, as you start to go down, your premiums are going to drop. This would be $287. This is $550. This is $1,000. You want to really take it? You can make $1,800, $2,000 right now. But you're probably going to lose this bet. And when I say lose, that means that you're going to buy the shares. If you already, here's the good thing. If you're like, I already want to own 100 shares of Tesla, no matter what, that is my goal, then click this button right here and make $2,000. Because you are going to get, probably going to get assigned those shares, but you're going to make $2,000 in the process. And that is amazing. You're probably going to buy, the risk here though is you're going to be buying the shares at 480, and if it drops down to 430, you're really going to be kind of in the dirt there. You really want to play it a little bit more safe, right? This is up here is extremely safe. The chances of it dropping down to 410 are very, very low. Almost 0%. Almost. The chances of it staying where it's at is also low, and the chances of it moving the opposite direction is very high. So what we're going to do here is we're going to select something in the middle, right? We want like an average, a mean, an average. So I'm going to pick 457.5. When you click on this button, it's automatically going to bring up your sell order. Bid is sell, ask is buy. I'm bidding this, it's being bid at a price, and then the ask is the how much do you want to pay for it. If I were to click ask, it would bring up a green box here. We do not want that. We want a red box because we're selling. All right. Now we want to sell one contract. One contract. Auto, Tesla, right? We want to sell a put. We're selling a cash secured put. We can do a limit price or we can do a market price, right? A limit basically says, I want to sell this at a very specific price, like $1,000. A market says, sell it right now. Don't care what the price is. I'm going to put it as a limit of 1,000. Which, if you look here, there's a mid and a low or whatever. Somewhere in here will be fine. You can see it's dancing around 1,000, so we're going to select that. This changes constantly. So if you're going to make a decision, then you know, do it fairly quickly. All right, so we're going to do limit, and you want good till canceled. GTC, not day. Good till canceled, right there. Day will just be, at the end of the day, it'll expire. This order will expire at the end of the day. All right, we're going to confirm it. There's a box that popped up that you can't see. But I'll show you. Not that. There's a dialog box here, and it's not... hang on. There it is. Okay. Sell Tesla, one Tesla, at a wait a minute. All right, let me back up. Remember what I said? Pick your expiration date. I didn't pick their expiration date. I forgot that. I was looking at the monthlies. Okay, so in here you see all these gray ones. These are the monthlies. That's fine. Or the weeklies. We want 30 to 45 days. This monthly is a little too close. Monthlies make more than weeklies. You really kind of want to be picking 30 to 45 days, even if it's a weekly. So in this case, I need to pick something closer to that 30 to 45 days. So I'm going to pick 35 days. We'll be able to make more money doing this. Oh, you thought we're going to make 1,000? No, we're going to make more. Yeah. Okay. Now I'm in the correct spot. 35 days. Look at the premiums, you guys. Look at the premiums on Tesla. Look at the premiums on Tesla. Times 100. Times 100. $2,400. $2,200. $2,000. Look at these premiums, you guys. When I click this button, we're going to make $2,000. Just like that. Ah! I love stock options. And this is why right here. Because the premiums are so stinking good. W's in the chat, you guys. If you're still there. I still got you. I don't know how many people are still here. Give me some W's in the chat. This is insane. This is insane. The only one talking right now is Stream Elements. Oh, you're there. You're there. Okay, good. You guys are still following along. Haven't heard from you in a while. Stream Elements is my best chatter right now. Okay. All right. So W's. Okay, good. You guys are still here. Good. Good, crazy, good, Alex. Appreciate it. All right. So we wanted, and Mark. What's going on, Mark? Good to see you. All right. We're going to make $2,000 like right now. Right now. Now we're putting up almost 50 grand in collateral. So keep that in mind. Because it's not just, oh, just a free $2,000. It is, but we have to put up collateral to do it. So I want to look at the delta over here. I really want between 0.25 and 0.30, which if you remember, I said I wanted below 465 support level, maybe around 445, right? So I can play it safe here. 445, and I'll make about $1,400. If I want to get a little bit more aggressive, I can come up a little bit and make that closer to that $2,000. These premiums are insane. Let's pick 0.31. We're going to make $1,500 right now. 450. The stock is currently at 478. It's moving kind of away, so I think this is going to work out. This contract could close by the end of the day, and I'll keep that $1,500. So I'm going to click there. Sell. Make sure you change it to 1. In Thinkorswim, it's a negative number. I'm gonna sell this at market price. Market and day. Market day. Here's the pop-up. We're gonna make $1,600 by selling this contract right now. It's still working. It's a market order, so it'll fill right away. There it is. You guys heard that? There's the confirmation in the corner. Filled 1 Tesla for $1,600. I love options. Oh, I love options so freaking much. I just made $1,600, bro. We just made real live $1,600. Okay, it's in a paper account. It's a simulated, but you guys understand what I'm saying here. Now, next thing we need to do before we do anything else, we need to make a decision. Do we want to let this go the entire 35 days to expire? Or what I propose, which makes this strategy 100% profitable and makes it better, is to buy back our contract when it has mostly deteriorated. And I want to buy back my contract when it's mostly deteriorated because it's going to shorten them. I guess that means I should stop streaming. Hang on. my lights. I want to buy back my contract when it's mostly deteriorated, so that way I can rotate my capital again. All right, so what I'm going to do here, while my lights slowly come back on, is I'm going to go into where that order was. Here it is, Tesla. 450, strike. Sold it for a market. One fill at 16.15. Now you do have small fees and stuff, so you have to consider that. So let's go over to the calculator. Let me hide the chat over here, and let's go over to the calculator. Chat. Turn off chat. Turn off chat. All right. $1,600 divided by 4 is going to be around $400. We'll do 16.15 divided by 4. $403. That means that for every 25% that this contract deteriorates, that it loses $400 worth of value. Right now, it's worth $1,600. And I sold it. It's out in the market. Somebody can buy it for $1,600 if they want to. As time decays it by $30 to $40 per day, it's going to slowly lose value until it expires absolutely worthless, until it hits zero. So before that happens, I want to buy it back at $400. What that means is that I just collected $1,600 premium. That is my money. That is our money, right? It's sitting in our account right now. I'm going to use a quarter of that, 1/4 of that, to buy back the contract that I sold. And you might think, okay, well, you didn't make $1,600. You actually made like $1,200. Correct. I actually made $1,600, and it stays in my account until I decide to do something with it. And I'm making the decision to buy it back for $400 when it gets down to basically almost worthless. And why am I doing that? I'm doing that for 2 reasons. One, it shortens the amount of time that this contract is open. It's a 35-day contract. It's going to take a month. But the chances of it deteriorating, and here's the thing too, it could deteriorate all the way down, and then the market could turn around and it gains value again. The contract gains and loses value every day just based on where the stock is. There's a chance that the stock shoots up, that contract shrinks to basically zero in a couple of days. That's what just happened with Tesla. That's what just happened with Tesla this week. That contract shrunk down to like very, very little. And I had an order in there that says, before you go to zero, buy it back. Because it might shrink down to like, 10%, 15%. And then it might, if the stock goes the opposite way, then it's worth more. And so in order for me to buy it back, I'd have to spend like $2,000, $2,500. It is possible that it goes the opposite way. That's fine. At that point, I just let it expire. I buy the 100 shares that I agreed at the strike price, which is $450, and then we start part 2. But for part 1, since we're in part 1, I am going to put in an order here to buy this contract back. So what I'm going to click on is create opposite order. This is the only time you're buying a contract. The only time you're buying a contract is when you're buying back your own contract. That's the only time. And it's going to be green. But it is our contract. This is why I do the opposite order. That way I don't make a mistake and accidentally buy something else. No, I want to buy back the contract that I sold. I created it, and it's out in the market. Somebody's probably buying it, selling it, doing a bunch of stuff, but I have the final say. I have the final say to say, nope, it's mine. I'm taking it back. It's crazy that you can have this much control over a contract. I thought when I first started, you sell a contract, see it, you never see it again. It's out in the market, it's gone, whatever. No, I can find it and buy it back, and this is me doing it right here. So +1 auto, Tesla, same contract. Yep, 450. It's a put. Yep, it's not a call. It's a put. Market, we want to change it to limit. What price? $400. So just change this to a 4.0. It's actually 403, but whatever, it's close enough. That's times 100, $400. Limit, and you need to change it from day to good till canceled. And the reason why is because I don't want this thing sitting here for one day, because the chances that this happens in one day is pretty low. Couple days, couple weeks, whatever. Then confirm and send. Yep. Yep, $400. I already collected $1,600, so I'm just using that money. And send it. Okay. That's it. Simple. We haven't been signed contracts yet, so we can't do anything there. But if you guys can see on screen, we have Tesla. This one is working. We just sold this one. United Airlines, Nike, Visa, Delta Airlines, United Airlines again, and SMCI. And then, of course, you can see the details there. Now, you're going to see stuff like this where the P&L open is negative. Just ignore it. It doesn't mean anything. It doesn't mean anything at all. It doesn't mean anything until the contract is actually closed. Now, when you do this, we just put up $45,000 as collateral. So keep in mind, now if you started with 125, now you're going to have less. So you can't just sell infinite contracts. You have to sell contracts based on what kind of collateral you have and how much collateral you have. Yeah. Cool. We're going to stream for about another 15 minutes because I need to jump off at 11:30, which is about 15 minutes. So I'm going to use this time now to kind of clean up any questions you guys might have. And what we're going to do is next week we're going to take a look at what this did. Tim, if you're watching this on the replay, basically everything I just did with Tesla is going to be the same for SMCI. While I'm waiting for you guys' questions, I'm just going to look at SMCI. If you guys have any questions, let me know. Oops. You probably start, if you're doing real cash, you'll probably start with something around SMCI level. If you remember, Tesla was like $400. SMCI is $30 per share. $20 to $30 per share. But it jumps. Sometimes it goes up to 50, 60, 70, and then it comes back down to 30, back and forth. So the premiums here are ranging from about $45 to about $142, $188. That's real money. Like we just made $1,600 in Tesla, but we had to put up $45,000 of collateral. In here, we can make around $75 to $100, putting up only $2,700 to $2,800 of collateral. So you can see why the big boys pay so well, because you have to put up a lot of collateral. Or if you have enough, you can just sell multiple of SMCI. You don't have to sell just one. In this case, if we had $30,000 of collateral, we could sell 10 contracts. And we would make about $1,000. $750 to $1,000 putting up $30,000 of collateral. So that's where the math really starts working in your favor. Okay, I can sell one contract for Tesla and make, we'll just say $1,500, but I have to put up $45,000 of collateral. All right. Or on SMCI, I can sell 10 contracts and I'll put up about 30,000 and I'll make around 1,000. It's probably about the same. If you were to put up 35 to 40, if you were to put up $45,000 of collateral, that would be basically 45 contracts here. You would probably make, wait, that's not, no, not 45 contracts. That's not right. It's like 15 contracts, You would probably make about 1,500, between 1,000 and 1,200 ish, depending on how far you want to go with it. So the more money that you have, the more collateral that you have, the more contracts you can sell, and the more big boy contracts you can sell. So if I were to look at SMCI, come on, I hate this. Is there like a snap too? Why do I have to do this? You can see SMCI's kind of been falling lately, so I would probably avoid this one at the time being right now. However, we do have a contract in right now, but you can see it's constantly like up and down, and lately it's been down. But see, it's been falling lately. When it's falling like this, you want to try and wait for it to recover. This would be just fine if I was selling covered calls, because we want it to stay below a price. But when you're selling cash secured puts, you really want it to not be falling off a cliff. It's worth it to wait a little bit for it to come back and stabilize, because you're taking advantage of its upswing in cash secured puts. So in this case, I would probably avoid SMCI for a little bit. But if you were going to open a contract, so you can't, where's the best support level? It's really kind of hard to tell, right? It's going the wrong way. You can maybe say 28 was the low. It's pretty close to lows right now. SMCI really needs to recover, but I have a feeling it's going to recover in January. I don't know. I hope so, because I actually have this I have real money in SMCI right now. But I don't know. What's a good support level? 28, maybe 30. It's kind of at 30. I probably wouldn't sell it right now, but if I were to look at 28, you can still make a little bit. You can make $100, but I like I said, I would wait for it to kind of recover. All right, you guys have any more questions? I threw the whole fire hydrant at you. And you can always go back and watch this stream. You can go back and watch the other streams that I've done. I've got 2 more on this strategy. Yeah, if you guys are good, then we'll probably call it there. There's only a couple. I've only got 3 people left. Whoever is still here, I appreciate you hanging out this long. Most people, I guess, are bored and don't want to make any money. I got 3 people left. I think it's probably Mark, Crazy, and Alex. Yep, you guys are good. No, I can't. I only have 3 people left. I just checked the numbers. Oh, you guys are the best. You guys are the OG crew. Well, hey, guess what? You guys are gonna make money doing this, and nobody else is going to. Eventually, it'll catch on, I guess. Right? I know some people had to step away because they had to do other stuff where it's really late and they had to go to sleep. So no blame there. But it's funny. I started with like 25 and now I'm at 3. So, well, I am gonna jump off as well. Then you can follow the Discord. Jump in the Discord. And if you have questions there, I can answer questions there too. TikTok, that's a free Discord if you want to jump in. A lot of great info. Yeah, absolutely, Alex. It's a lot heady stuff, right? There's a lot to take in, but once you get the concept, once you get the process of it, you'll be firing on all cylinders. It's pretty quick. It's just like anything. It takes a little bit to learn, just like futures. You have to get into it. Futures, though, is a struggle for most people from what I've seen. And you're trying to catch the right setup at the right time. And there's a little bit of luck and stuff that's there. With this, what we're doing here, we're really in control. Yeah, you got to watch it again. Absolutely. What you got TikTok and YouTube going at the same time, so you're good, Alex. I appreciate you being on both, man. 52,000 likes. Are you crazy? 52. You're crazy, dude. Oh, you're the best, man. That's insane. Oh, dude, I'm sitting over here. I'm not even paying attention. I pulled up TikTok. I'm like, what? Oh, that's insane. I hope that does something, man. I hope that does something. Thanks, man. I appreciate it. You did that the other day too, and I was just like blown away by it. Yeah, that's awesome, dude. I appreciate it. I hope your mouse isn't broken by now. or your screen. Your screen's gonna be broken by now. It's funny. Dang, that's 52. That's a long time to be tapping the screen. You're awesome, dude. You're awesome. Appreciate you, Alex. I really do. That's sick. That's sick. Well, hopefully I can return the favor by teaching you this strategy and you can put some money in your bank account. That's my goal. That's my goal. That's always been my goal. I'll never have a course. I'll never have a mentorship. I'll never do any of that stuff. Here it is. Take it or leave it. And that's how I operate. I operate with, I'm just one, this is the way I'll put it right here. I'll make this into a short. This is how you make money in the market. This is selling options. And the best way that I can put it is, I'll never have a course. I'll never have a mentorship, right? I'm giving this information out for free. And I'm doing this every single day, every single Friday. We're talking about options. And this is the best way that I can explain it. I'm just one beggar telling another beggar, or I'm one homeless person telling another homeless person where there's a table of food. Hey man, I found this food over here. It's really good. Come check it out. Take it or leave it. I'll see you over there. That's basically how I'm operating. And that's what this entire YouTube channel is about. That's it right there. Just one beggar telling another beggar where there's a table of food. And I absolutely genuinely mean that. Every single day we show up to the market, this is what we're doing. That's the goal. So I'm going to turn that into a short. Cool. Awesome. I am going to jump off, my friends. Feel free to watch it back. Take your time. Absorb it. Practice it. You don't even have to have an account to practice it. You can just watch the market. Oh, I would take that one. Oh, I'd take that one. Here's how much I would make. I'd make $100. I'd have to put up 40,000 for collateral to make more. Okay, cool. I've got 50,000. Like, you can do the math and you can play around with it. But I promise you, it will work in your favor. I've made quite a bit of money off this strategy already. 100% strategy. 100%. Never lost any money. It's not even a strategy. It's a method. It's a method that the big boys use. It's the Warren Buffetts and the people who have a lot of money in this world. This is what they're doing. Why not do it too? Awesome. All right, you guys, have a good weekend. I will see you again Monday. We'll start the futures cycle all over again. Futures gives me a headache. So this to me is calm, cool, collected, easy breezy, passive income. I love it. Awesome. All right, you guys. Appreciate you, Alex. Appreciate Crazy. I think you guys are the only two. There's one more person here. I'm not sure who it is. Maybe it's Mark or Algo. Algo might be off. But either way, you guys are the best. I appreciate you so much. And if you want to continue the conversation in the Discord, I will be monitoring. Consider subscribing to the crew, as Stream Elements likes to say. Yeah, we'll see you next week. All right, enjoy. See you guys.